Hello, my friends. Today is October 4th, and this is Markets Weekly. So, this past week, looking at the broad equity indexes, doesn't seem like that much is going on. We have people whispering of an October, and the market did trend up a little bit, though historically, October has been a volatile month. Gold and silver also trended higher, did have a notable down day on Thursday, but those losses were recouped on Friday. Now, the big news the past week, of course, was the government shutdown, and related to that, the lack of the monthly non-farms payrolls prints. So today, let's talk a little bit about what private measures of the labor market are saying. And secondly, let's talk a bit more about the government shutdown. All right, so every time in every, let's say, era, the market cares more about some things than others. When inflation was high, the market cared most of all about CPI, and in prior eras, it cared most about things like money growth and so forth. Right now, we are in a period where the market cares most of all about employment, and that's because that's what the Fed is focusing on. Now, over the past few weeks, it's become clear that the labor market is deteriorating. Now, inflation is still a little bit above the Fed's target, but the Fed has signaled that it's worried about the labor market, cut rates last month, and is guiding towards two more cuts this year. Unfortunately, we did not get the monthly non-farms payrolls print last week, and so the market is kind of flying blind, and so is the Fed. However, last week we did get some other reports from the private sector about the state of the labor market. So we do have some things to go on, and who knows, maybe going forward with more concern about public data sources, maybe there will be greater reliance on private data sources. And to be clear, this is not something that's new. I remember that after the financial crises and we were doing QE, many people were thinking we would have imminent hyperinflation, did not trust the inflation prints, and pointed to things like, the Billion Price Project or shadow stats or something like that, and were confident that actually hyperinflation was happening. It's just that the government was lying about it, and of course that was all nonsense. However, we do have some reputable measures of estimates of how the labor market is going. So let's talk about those. First off, we have the ADP monthly employment report that they put out. So ADP is a large payments processor. If you work in the private sector in the US, there's a good chance that you get your weekly paycheck processed by ADP. They have about 26 million employees in their service. So it's a pretty big sample of how the labor market is going. Now, the estimates were for the ADP print to show, say, 50,000 in jobs growth. They actually showed a loss of 30,000 jobs last month. Again, it's a huge, huge upset. Now, a big reason for them is that they revised their model, so updated their model to take into account the big benchmark revisions from that we got last month. So because of those benchmark revisions showing that overall the economy has created fewer jobs than expected, that affected their model, and so it gave us a negative 30,000 print. They mentioned that if not for those revisions, they'd have, say, 40,000 more, which would give them, let's say, a 10,000 increase in jobs, but of course that would still be below estimates. So overall, obviously a disappointing print, but it's just one measure. So let's look at other measures. Another payments processor, Paychex, it doesn't give as granular details, and they're also a sizable processor, cover about 10 million employees in the United States. Also, they produce this index, and also they have wage growth as well. According to their index, again, it doesn't look like the job market is doing very well. And if you look at their wage gains, it also seems like it's been steadily decelerating and, let's say, increases roughly about 3% annual rate. So nothing to write home about. Now, other prints that we get are from the ISM survey. So these are diffusion surveys. What happens is that they're given a survey and asked to say that, are things better, worse, or the same than last month? It doesn't measure magnitude, also only measures direction. And according to the ISM surveys, if you look at the employment subcomponent, it's all below 50. That means employment is getting worse. So basically, all the private sectors of employment that we get the past month all show that the labor market continues to do poorly. Now, I think it's really important to note that these measures of employment don't correlate very well with the non-farm payrolls data. So habitually, people usually ignore the ADP print. However, though, directionally, they tend to move in the same direction. So the non-farm payrolls print, when we eventually get it, probably won't look very good. Now, one thing to note is that you have a lot of people looking at this and just shrugging it off and saying, this is all due to supply side issues. That is to say, because of the crackdown in illegal immigration, that's what's infecting the jobs print. And that is definitely part of it. But it's also pretty clear, though, that there's a demand component, because if we suddenly have less supply of labor, you would expect that the price of labor, so wages, to go up, but that's just not happening. So definitely a demand component there as well. Now, one thing that I thought was super interesting the past week was that when we had the poor jobs market data from ADP, the market actually went up. The stock market went up, the bond markets, priced in more rate cuts, so rates went lower, but the stock market actually went up. So that seems to be a tell that we're in a regime where bad news is good news. Whereas normally you would say that, hey, we're increasing the probability of a recession. Maybe that's not good. Maybe stocks should sell off. But it seems like there's a class of investors who think that bad data, more rate cuts, market go up. So that's an interesting shift in the regime, and that's volatile. That could change at any moment. But that seems to be what's happening at the moment. So that leads us to my next topic, the government shutdown. So what happens during a government shutdown? So this is different from the debt ceiling issue. So periodically, we go into debt ceiling issues or government shutdowns. The last shutdown we had was during Trump's first term, and that's when the president demanded border wall funding in exchange for government funding. Didn't work well for him. That shutdown went on for over 30 days, and eventually he caved. But a government shutdown is when Congress, the legislator, can't agree on whether or not to have a bill to continue to fund the government. The government can access the debt markets, it can issue treasury debt, no problem. It just doesn't have the authority to spend the money. And that's what we're arguing towards right now. Now, when the government can't agree on, to have a bill to continue to finance the government, then the government just shuts down until it gets a bill. Now, during a shutdown, there's a division of employees between inessential and non-essential. Non-essential employees go home. There's about, let's say, 800,000 of these. But they're basically on furloughed or holiday or something like that. But don't worry, they are not paid at the moment, but when the government resumes, they get back pay. So the economic impact of this isn't super large. You can say that workers that would have gone to local restaurants to get lunch, now they're not doing that, and so the local restaurant will suffer. But insofar as the workers having money to spend, they're going to skip a paycheck, but they'll get that in back pay. So it's not that big of a deal. Essential workers will continue to work. So that's like the police, the military, airports. And it looks like a lot of the national parks will continue to function as well, which is great because I would hate to be a tourist, fly all the way over to the United States, go to Yellowstone, and find out that it's closed. So it seems like the impasse right now has to do with healthcare. So the Democrats would like to have renewal in a lot of the tax credits or the credits that support healthcare, whereas Republicans want those to lapse. Now, the argument the Democrats give is that these healthcare subsidies are going to impact a lot of Republican voters as well, and that's totally true. Poor people are part of the Democratic Party and part of the Republican Party, and if the Republicans continue with their not wanting to renew these healthcare subsidies, a lot of their own voters will be impacted, and so they feel that this is a good political issue. The messaging from the Republican side is that, well, the Democrats are trying to shut the government down because they want to give benefits to illegal immigrants. And honestly, that there's some truth to that as well. Some of the funding does go to illegal immigrants in emergency circumstances. And that is kind of a very unpopular point. There's a perception that Democrats are giving benefits to illegal immigrants. We've seen that over the past few years when illegal immigrants are given uh, lodging in hotels and food and so forth, and that's been unpopular since many poor Americans are feeling the pinch. So the shutdown, according to the betting markets, can go 17 days, although the people that I listen to who are really politically plugged in suggest that it will resolve faster than expected. The big problem, of course, is that, well, from the Republican side, nobody wants to cut healthcare. From the Democrat side, historically speaking, when you're trying to shut down the government as a negotiating position, it's not politically popular. So that's why President Trump had to cave in 2018. And this time around, the Democrats, of course, are aware of this. There's no fallout immediately. Stock market continues to go up. A lot of essential services continue to function. So there's really no urgency to end it. But as this goes on, I think there's more pressure on the side that's not willing, that's using this as a bargaining chip to cave. Now, why is this an issue? So this seems to be this seems to be driven largely by minority Senate leader Schumer of the state of New York. Now, earlier in the year, there was also the prospect of a shutdown. Senator Schumer caved very quickly back then, and that drew a lot of criticism from within the progressive wing of the Democratic Party. And he's sensitive to that. A lot of people in the Democratic Party are looking at all the things that President Trump is doing. They're very worried, and they really want their leaders to stand up and do something about it. Now, another wrinkle in this is that Senator Schumer, Senator of New York, is facing a potential challenge by progressive star Alexandria Ocasio-Cortez in 2028. So it seems like some people think that he might be facing some pressure to act a bit tougher and appease a bit more of the progressive elements in his constituency. Otherwise, maybe he'll lose in 2028, and AOC is a very formidable political star, and of course she's part of the progressive wing. So looks like we're going to just kind of hold this until probably we get some kind of resolution. My best guess is that this will get resolved next week, and when that happens, I think the markets will like it, and maybe traditional safe havens that were perceived to benefit from this, like gold and crypto, might have a pullback. Now, one thing to note, though, is that one of the reasons why you can have this end quickly is that you kind of want some kind of forcing mechanism. So it looks like we're not getting big complaints from people. It looks like we're not getting good complaints on the market. So it could also be one of these weird circumstances where unless the market goes down, we won't have a resolution. And so, but when we do have a resolution, the market will up. So it's kind of silly like this. Anyway, we'll find out next week. So far, it doesn't seem to be a big deal. And again, this can drag on for a long time. Last time it lasted more than 30 days. Right now, it's only been 3. All right, so that's all I have prepared for this week. Talk to you all next week.